Let me paint a picture that might feel a little too familiar. You worked hard, you ground it out, and you landed a solid job with a salary that, honestly, your younger self would have been totally blown away by. But, and here's the catch, at the end of every single month, you're staring at your bank account just wondering, where on earth did it all go? You weren't living some extravagant lifestyle, but somehow you're still living paycheck to paycheck, completely broke. Look, it's an incredibly uncomfortable reality for so many people right now. So today, in this explainer, we're going to get to the absolute bottom of exactly why this happens, and way more importantly, how to completely rewire your financial life using what we call the Financial Awakening Blueprint.
To do that, we've got a really clear roadmap to take you from losing money to compounding real wealth. First, we're looking at the high salary trap. Then, we'll talk about upgrading your wealth software. Third, monetizing your skills. And finally, we'll wrap up with the power of investing.
All right, let's jump right into phase 1, the high salary trap.
Let's talk about a very specific number, $200 to $500. This is the hidden monthly cost of what's known as subscription creep. We live in this crazy subscription economy where companies basically just want you to sign up and forget about it. Think about it. Netflix, Spotify, maybe that gym membership you literally haven't used since January, or some app you downloaded 3 years ago. Individually, yeah, they feel small, but combined, most people are bleeding out an absurd $200 to $500 a month. I guarantee you, if you pull up your bank statement right now, you're going to find at least 3 subscriptions you completely forgot you were even paying for. And that is money that absolutely belongs in your investment account, not in the deep pockets of a streaming service.
But subscriptions aren't the only leak. Let's look at the rest of these insidious habits that are keeping high earners completely broke. Right at the top, lifestyle inflation. You get a raise, and what happens? Boom. Immediately, you upgrade your apartment, you lease a newer car, you start eating at fancier restaurants. Your expenses are just blindly matching your income, which means your actual savings rate stays at 0. Then, there's the second massive mistake, paying everyone else before yourself. You pay the rent, you pay the bills, you pay for weekend drinks, and then you hope to save whatever's left. But spoiler alert, there's never anything left. The wealthy completely reverse this. The absolute second that paycheck lands, a percentage goes straight into savings and investments before a single bill gets paid. Throw in high-interest debt, which acts like a massive open drain on your wealth, and buying appearances, designer clothes just to look successful, instead of buying actual assets to actually be successful, and well, you can see the trap.
Okay, so how do we fix this? Let's move to phase 2, upgrading your wealth software.
See, the biggest gap between the rich and the broke actually isn't their income. It's their mental operating system. Rich people focus on buying assets, while broke people focus on buying stuff. Broke people spend their hard-earned cash on things that make them look good right now, things that basically go to zero in value over time. They're buying liabilities that are just dressed up to look like assets. The wealthy, though, they spend their money on actual assets, things that put money right back into their pocket, like investments, businesses, and real estate. They buy things that grow, instead of things that decay.
Now, think about how these two groups react when they hit a financial hurdle. When a broke person sees something expensive, their default reaction is immediately, I can't afford this. And boom, just like that, the conversation ends. The brain totally shuts down. But when a wealthy person looks at the exact same expensive thing, they ask, how can I afford this? It's a subtle shift, but that one simple question instantly opens up the mind to creative problem solving. It forces your brain to actually look for solutions instead of just passively accepting limitations.
Building right on top of that, wealthy people think in automated systems, while broke people think in single transactions. A broke person is constantly stressing over today's paycheck, today's grocery bill, today's coffee. But a rich person? They ask, how do I create a financial machine? How do I automate my savings and my investments so that my money flows in the exact right direction without me even having to think about it? Because true wealth is built by creating these automated background systems. It frees you up to actually focus on living and growing rather than pulling your hair out over every single transaction.
All right, we've set up a solid defense. Now let's pivot to playing offense with phase 3, monetizing skills.
Here is the exact chronological pipeline to take your raw abilities and turn them into a scalable, cash-generating side hustle today. Step 1, identify your natural skills. What do people consistently come to you for help with? Step 2, package that as a solution. Step 3, choose your monetization model. And step 4, find that very first client. Let's really break this down.
Let's zoom right in on step 2, because honestly, this is where most people fail. Remember this. People don't buy skills, they buy solutions and transformations. This is such a critical difference. Let's be real, nobody actually wants to buy the generic skill of graphic design. What they actually want to buy is a highly specific solution like, I will create a professional brand identity for your small business in 5 days. Do you see the difference there? One is just a skill, the other is a tangible, specific outcome. If you package your skill as a solution to someone's nagging problem, people will gladly open their wallets to pay you for it.
Now for step 3, you can take that single skill and monetize it using one of 4 distinct models. First, you could do freelancing, which is simply trading your time for a service. It's super fast to start, but the scaling potential is pretty low. Or you could try teaching through courses, which has fantastic scaling potential. You could do consulting, offering expert guidance for high-ticket clients. But consider digital products, things like ebooks, templates, or design assets. The scaling potential here is off the charts. Why? Because you build it exactly once, and you sell it endlessly. It is literally the absolute closest thing to real passive income in the real world.
But listen, absolutely nothing happens until you execute step 4. So here's a quick reality check for all the perfectionists out there. Your first client doesn't care about your website. They care about whether you can solve their problem. So many incredibly talented people get stuck spending months trying to make the perfect logo or the most aesthetic Instagram profile. Seriously, stop hiding behind the setup phase. Go out to your network today, find just one person who has the exact problem your skill solves, and offer to fix it for them. Just go get that very first paying client. That is where the real magic starts.
Okay, let's move into our final section, the ultimate wealth multiplier. Phase 4, the power of investing.
To prove to you that you absolutely cannot save your way to true wealth, let me tell you the mind-blowing story of Marcus versus Jordan. So Marcus starts investing $200 a month at age 22. He does this for just 10 years, stops completely at age 32, and never invests another single dollar. Jordan, on the other hand, waits until he's 32 to even get started. He invests that exact same $200 a month, but he does it for 30 whole years, all the way to age 62. Now, common sense logic says Jordan obviously wins, right? I mean, 30 years of investing versus 10. But the wild reality is that Marcus ends up with significantly more money. Starting earlier, absolutely, hands down, beats investing more total money.
And the reason Marcus wins comes down to one simple concept: compound interest. It's when your money earns returns, and then those returns earn returns, exponentially building on itself over time. It's like a snowball rolling down a massive hill. But here's the ultimate secret. Time is the absolute most important ingredient here. Without time, compound interest is just a dry math concept. But with time, it is the most powerful wealth-building force on the planet. Which means every single year you wait to start is an exponential cost to your future self.
Let me deliver the mathematical knockout punch here, because these numbers are just staggering. If you invest a mere $100 a month at an 8% return starting at age 20, you end up with over $525,000 by age 65. If you wait just one single decade and start at age 30, that same $100 a month drastically shrinks down to $230,000. Wait until age 40 to get started, you end up with just $95,000. Just think about how much wealth literally vanishes into thin air with every decade you delay. Time is everything. So, the million-dollar question, where do you actually put this money? Let's completely demystify that right now. For most beginners, the simplest answer is index funds. They are incredibly low-cost and super low maintenance. Instead of trying to play Wall Street and guess which individual stock is going to win, you just buy a tiny little piece of the entire market. Now, does the market go through crashes and recessions? Yes, of course. But historically, it always recovers and trends upward over the long haul. The secret is to just keep it simple, automate your monthly contributions, ignore the scary news about market crashes, and just let time do its heavy lifting.
All right, let's bring this whole explainer home with one final thought. Which version of your future self are you going to choose today? I want you to imagine the stressed, totally broke version of yourself reaching retirement. You know, the one who fell for the high salary trap, the one who bought stuff instead of assets, and the one who always waited for the perfect time to start investing. Now picture the financially free version of yourself, the one who upgraded their mental software today, monetized their skills, and let compound interest do the heavy lifting for decades. The only difference between those two futures is the choice you make right now. The blueprint is right here in your hands. So what are you going to build with it?